This is Vaishnavi, and I am going to talk on digital currency and central bank digital currencies (CBDCs) transforming the financial landscape. Traditional banking and financial systems are transforming across the globe owing to the effects of COVID-19 epidemic, shifting trading dynamics and pervasive technological advancements. Post demonetization in 2016 and the launch of Digital India initiative, the government in India has been focusing on the use of digital space and digital money. Finance Minister announced the introduction of Central Bank Digital Currency (CBDC). So now, what is a central bank digital currency or CBDC? According to RBI, a CBDC is a legal tender issued by a central bank in a digital form. It is the same as a fiat currency and is exchangeable one to one with the fiat currency. Only its form is different. In other words, digital currency is digitized or virtual version of domestic currency that is equal to physical cash. CBDC, though a virtual or digital currency, differs from private cryptocurrencies in that it satisfies a key requirement of the definition of a currency being backed and issued by a central bank. CBDC is the same as money issued by a central bank, except it doesn't come in paper form. It is a sovereign currency in electronic form and would appear as a liability, that is, currency in circulation on the balance sheet of the Central Bank of India. Hence, central bank digital currency is the legal tender issued and governed by the central bank, is in digital form, same as fiat currency, will be backed on blockchain technology. Although CBDC is virtual or digital currency, it cannot be compared to the private virtual currencies or cryptocurrencies that have exploded over the past 10 years. It is also essential to understand the difference between CBDC and cryptocurrencies. Not all digital currencies are cryptocurrencies, but all cryptocurrencies are digital currencies. Digital currency may not be encrypted, but cryptocurrency operates in an encrypted format through blockchain technology. Since there is no issuer, private virtual currencies do not represent any person's debt or liabilities. The landscape of global finance has been undergoing a significant transformation in recent years, driven by the rise of digital currency and the exploration of CBDCs. Digital currency, a form of currency existing purely in electronic form, has emerged as a viable alternative to traditional physical currency. Now let's talk about the digital currency, its evolution and adoption. The inception of Bitcoin in 2009 marked the beginning of the digital currency revolution. Bitcoin, a decentralized cryptocurrency, introduced the concept of blockchain technology, which underpins most digital currencies today. Blockchain's distributed ledger system offers transparency, security, and immutability, making it an attractive solution for various industries beyond finance. As Bitcoin gained popularity, numerous other cryptocurrencies, collectively referred to as altcoins, emerged, each with unique features and use cases. The adoption of digital currency has been on a steady rise, primarily due to its advantages. Transactions with digital currencies offer near instantaneous settlement, lower transaction costs, and borderless accessibility. Additionally, they provide financial inclusion for individuals without access to traditional banking services, particularly in regions with underdeveloped banking infrastructure. CBDCs, exploring the potential. CBDCs are indeed an evolution of traditional fiat currencies issued and regulated by the central banks. Unlike cryptocurrencies such as Bitcoin, CBDCs are centralized and typically built on blockchain or distributed ledger technology. They offer central banks great control over the monetary system while harnessing the benefits of digital currency technology. The potential advantages of CBDCs are multifaceted. First, they could enhance the efficiency of payment systems, allowing for real-time settlement and reducing the need for intermediaries. Second, they could enable targeted monetary policy interventions, allowing central banks to implement measures like negative interest rates more effectively. Then, CBDC could mitigate the risks associated with physical cash, such as counterfeiting and money laundering. Finally, CBDCs could promote financial inclusion by providing a secure and accessible digital payment method for underserved populations. Now, we can see the impact on financial institutions. The introduction of CBDCs could reshape the landscape for financial institutions. Commercial banks may face both opportunities and challenges. On one hand, CBDCs could enhance the efficiency of interbank transactions, reducing settlement times and lowering costs. On the other hand, the direct competition between CBDCs and commercial bank deposits could lead to a shift in deposit patterns, potentially affecting the profitability of banks. Payment service providers and fintech companies could experience growth opportunities as CBDCs create new avenues for innovation. These entities could develop user-friendly interfaces and value-added services for CBDC transactions, further accelerating the adoption of digital payments. Now let's see the challenges and considerations. Despite the potential benefit, the implementation of CBDCs poses various challenges. Technological considerations include the need for robust cybersecurity measures to prevent hacking and data breaches. Additionally, the scalability of CBDC systems to handle a nation's entire payment volume is a significant technical challenge. Privacy concerns also come to the fore. While CBDCs offer traceable transactions that could aid in combating illegal activities, they raise questions about the extent to which citizens' financial transactions are monitored by authorities. So, what would be the global implications? The adoption of CBDCs on a global scale could reshape international finance and geopolitics. CBDCs could streamline cross-border transactions, reducing the need for intermediaries and potentially enhancing financial stability. However, CBDCs could also lead to increased currency competition and potential disrupt the role of the US dollar as the world's primary reserve currency. Why has CBDC suddenly gained popularity in India? So, what would be the global implications? The adoption of CBDCs on a global scale could reshape international finance and geopolitics. CBDCs could streamline cross-border transactions, reducing the need for intermediaries and potentially enhancing financial stability. However, CBDCs could also lead to increased currency competition and potentially disrupt the role of the US dollar as the world's primary reserve currency. Why has CBDC suddenly gained popularity in India? CBDC or the digital rupee can be used in many real-world applications such as programmable payments for subsidies and quicker lending and payment by financial institutions. A practical transition to a cashless economy may occur soon, and this might strengthen the government's emphasis on cashless transactions. Cross-border remittances may gain from increased use of CBDC as an environment for interoperability may be established, allowing for faster real-time transmission. Let's see how CBDC differs from other digital mechanisms and why is it considered better. There are numerous ways and platforms available for digital payments. However, a CBDC has some advantages over other alternatives, and these are: as the government central banks back CBDC, it is regarded as being more stable than cryptocurrencies, which may be very volatile. Large transactions can be made using a CBDC without worrying about the cap imposed by cryptocurrency. A CBDC is faster and efficient than other digital payment methods such as blockchain-based payments, as it would be harder to launder money via a CBDC than other digital payment systems. A CBDC can assist in reducing crime. Digital currency will be different from Unified Payments Interface (UPI), which is a system that powers multiple bank accounts into a single mobile application. The underlying currency or cash is used to transmit funds through payment channels like UPI. So UPI payments are currently made with the digital equivalent of physical cash notes. This means that each rupee moved through UPI is backed by actual money, whereas in the case of CBDC, the underlying payment method will be the digital rupee and there won't be a need to back it by real money because it will be the legal tender in and of itself. The digital rupee will be run by the RBI rather by bank intermediates, as is the case with UPI, where each bank has a different UPI handler, which is the other point of distinction. Furthermore, digital rupee transaction will be instantly settled. Currently, UPI payments rely on the settlement of the transacting banks with the RBI. However, since digital rupee will be transacting straight from the RBI, it will be settled immediately. So while we look into the differences between CBDC e-rupee and UPI, when we talk about the status, CBDC, the central bank digital currency, is a legal tender and is the digital avatar of the country's fiat currency, whereas UPI, United Payments Interface, facilitates real time digital payment options through an interbank interface on peer to peer and merchant transactions. The purpose of CBDC e-rupee would be that it is introduced as a digital alternative to the national currency as well as the legal alternative by RBI to cryptocurrency, whereas the purpose of UPI is to act as an interface for payments. The types of CBDC, it would be classified under wholesale and retail categories. Whereas in UPI, there are no types but different participants in UPIs. This includes bank account holders, merchants, NPCI, payers, and payee PSPs, remitter, and beneficiary banks. I would like to conclude and sum up by saying CBDC is the legal and government recognized alternative to fiat currency that serves a lot of purposes. Unlike cryptocurrency, it is free from speculation as its value is backed by the national currency. It is also more than an interface or fund transfer mode. It is expected to improve digital payments further. In conclusion, the emergence of digital currency and the exploration of CBDCs are reshaping the financial landscape. Digital currencies offer unprecedented efficiency, accessibility, and inclusivity. CBDCs, as a digitized version of national currencies, hold promise in terms of payment system efficiency, monetary policy effectiveness, and financial inclusion. As the world progresses, technology intervention is leading to the digitization of services as well as ways of working across industries. We are now at the cusp of entering a new phase of banking, with the digitization of currency being the first step in the evolution as more innovative payment methods are being developed. Central banks have now started to level up their own digital currencies, also called central bank digital currencies, that is CBDCs. Similar to how UPI made digital cash more user friendly, this advancement will increase people's access to digital currencies.